Hey, quick market update for me. Hope you guys are having a great day. I know the current situation does not look pretty specifically when it comes to stocks and Bitcoin. So let's go ahead and take a look. Mainly, this picture really shows it all with this chart. And honestly, I want to go to the daily chart. And this blue box right here, I drew this blue box over a week ago, and I said basically you got to close above this blue box. I said above 72 to 73K that we needed to break above and close at least on the daily above this to break this range and to continue to go up and perhaps retest the previous range up above 84, 85K. And right now that's just not happening. Now, we currently have a rejection. This area has been a sticky point for a while. And as we know, there's a lot of things that are going on that are specifically impacting the market, especially when it comes to Bitcoin and crypto. We had a nice run there with a few assets, specifically around Venice and AI and a few other things. But in general, things aren't looking great overall. At least not as we go into the weekend, into next week to get some more clarity. But what we do know is that Bitcoin is currently rejecting here, and we're currently going back to inside the range. And so are we just going to continue to range back and forth here? Now, this does not necessarily mean that Bitcoin is going to continue on down, okay? It doesn't mean that it's just going to continue down and break on down. But it's not a good indicator overall with what's happening, specifically when it comes to oil right now. Just a massive spike. If you want to take a look at that on the daily here, from 69 up to over $90, with Polymarket actually having this at a high chance, I think of at least 68% to go back above $100 a barrel, which this is not a good thing because that definitely will impact inflation. If inflation comes out, that will definitely impact the Fed. Now, I don't want to cut rates, and what that will impact is your stock market right here that has been going in a range for a while, and that likely will continue to sell off because we tend to have the risk curve where, of course, people will slowly move into safer assets, move into cash, etc. Because of this, because of the oil spiking, we tend to have a lot of sell-off in tech, specifically NVIDIA and Amazon and Meta and Tesla and Apple, and all those are all down for the day. And you have to recognize that they make up a big portion of the stock index. And because of those being down, that in general is going to pull down the overall market because they hold so much of the percentage. That's what we've been watching today in the stock market over the last couple of days when, of course, we know we're having some geopolitical issues when it comes to a war, perhaps in Iran, being prolonged throughout the rest of the year. That's bad again because of multiple things. We'll get into the oil thing in a minute, but really we're seeing that could play a huge impact on no rate cuts, right? So the expectation of rate cuts was already low and perhaps even lower now. And again, because of this geopolitical event, are we going to have the Fed come out and speak hawkish commentary here in the coming days to weeks? Are we going to have coming CPI and PPI inflation run hot eventually? And is this going to hurt earnings? One thing that you can look at too is I actually put in some information here in Capra to really help break down why things are happening for the typical investor. And again, a nice chart that was made. But basically, when it comes down to it, a really easy chart is that oil at $90 is going to end up spiking inflation fears. That's going to spike gas, that's going to spike transportation, and that's going to lead to a spike in goods, okay? So when gas prices jump, not only do people feel it at the pump, but again, transportation, the cost of trucking and shipping and airlines, and that ends up hurting as well manufacturing input cost, okay? So all these things is a nightmare to the Fed. So what we end up happening is perhaps the Fed will stay hawkish, rate cuts get delayed, and of course you have consumer pain. Also, when the oil goes up, you end up having some margin squeeze, higher input costs, and then of course, as we talked about earlier, a bit of a tech sell-off, higher discount rates, overall a market sell-off or lower stock prices, which is going to end up hurting your Bitcoin and crypto prices as well. But really, it comes down to this. The inflation fear is real. the Fed rate cut is real as well, as far as prolonging those for later on. Consumer spending gets high. Again, the average American spends $200 to $300 of gas a month. And when oil jumps $20 a barrel, you're going to have more money out of the pockets of everyday people, which in the end, the Fed wants to end up helping overall when it comes to that. Of course, we have to continue to see what jobs do. But with the corporate margins being compressed, again, absorbing those higher costs and passing that on to the consumer, losers are going to end up being tech. It's going to be up a lot of the stocks, right? Going to end up being small caps, airlines, and some of that discretionary of consumer. And winners could potentially be other energy, other commodities, defensive sectors, and some value growth. That's just a quick explanation if you didn't really understand what's going on and why the big deal it is when it comes to these oil spikes. So that's with the Capra app. But going back to the chart, again, stocks are down as we go into the weekend and oil continues to pump. And because of that, we're seeing the stock pull back as well too. We're seeing Bitcoin and crypto pull back as well. And so really, we just really want to see it continue to stay in this range back and forth. If it does break below here, do expect it to hit down to 50K, below 50K over time. Was hoping that we could get a run up, but not the case right now. So unfortunately, we're not going to have that run up for Bitcoin. It's got to come back up here, retest 73, 74, break that. And I think that if it can break that, then we'll get a retest above 80K, 85K or so would be a good target to take profits at if we get this. So wait for that break at 73,000 on the daily 4-hour chart. Those specifically, if you can do that, then I think we can retest up here to around 84, 85K. But that trade does not come about unless this breaks. So that's my signal that I'm waiting for, my trigger, if that can show some strength. And again, can we have oil go back down here? Can we have this big spike kind of get pushed back down? Then perhaps that's the case. But as now, this is what's going on with the market. So that's just a quick update on what's going on with Bitcoin. We want to maintain this range. We want to break it back above 73K. Again, I am holding spot Bitcoin, am holding some spot AI assets, diversifying a little bit. Definitely have cash in hand, because the most important thing for you to be successful is to have cash when nobody else has cash. And so if the market were to crash here, do you have cash on hand? I'm not saying it's going to crash, but over the next 6 to 8 months, with oil prices going up like they have, with no rate cuts, with the risk of geopolitical issues at hand, typically we see that in these midterm election years that prices do go down, specifically when it comes to risk assets and stocks. And so if that happens, are you going to have cash in hand in order to buy when others can't? And that's when the real opportunities come about. All right, guys. So again, hopefully this is a good, clear breakdown of what's happening right now when it comes to oil in the markets. Got to take it week by week here. Stay patient, and I think you'll be rewarded. With that said, you guys have a great rest of your day. Trade safe, and I will see you on the next one.